Hello and a very warm welcome to everyone. I am Shrija Agrawal and it's my sheer pleasure and privilege to host you at this roundtable titled Sustainable Finance Raising Funding Through UK Capital Markets. This Mint Roundtable is being hosted in partnership with the UK Government Department for International Trade. Before we deep dive into this panel discussion, it's time for some context setting on the same. COVID 19 is the biggest threat that the global economy has faced in decades and has transformed the need for significantly more resilience in our economic model and financial system. There is strong interest internationally in increasing capital flows into sustainable infrastructure and in ESG considerations more broadly. India and the UK are committed to ensuring that recovery from the pandemic is sustainable, clean, and resilient, and ensuring flows of sustainable finance will be central to this. At the COP26 in 2021, Indian Prime Minister Narendra Modi committed to achieving net zero emissions by 2070. Coming to the UK, it is leading the way when it comes to ambitious climate change targets to kickstart a green industrial revolution. This is also being shaped by a dynamic between its domestic green economy priorities and its global financial hub. It now seems incumbent on this financial sector to play its part because aligning it with sustainability is beneficial for all stakeholders in the long run. London is subject to a couple of sustainable finance initiatives that are setting the agenda domestically and internationally. It's also become the prime spot for integrating and incorporating ESG factors in institutional investments. In September 2021, the UK government raised £10 billion for green projects through the sale of the first green gilt, and this was the largest inaugural green bond issuance by any sovereign. So both countries are really trying to determine how to embed sustainable financing in their core DNA. Yet, have climate and environmental considerations become central to the decision making processes of boards, and have they become incorporated in investors' risk and return calculations? The big question to really ask really is that are enterprises in an apt position to seize opportunities presented by transitioning to net zero? What is the road ahead for sustainable finance and raising funds through UK capital markets? This discussion will bring together significant voices and thought leaders from both the UK and India and aims to establish a constructive dialogue on the role of sustainable infrastructure development in economic growth and how greater use of international finance would meet the larger financing gap in India. But before we deep dive into this meaningful panel with my panel discussion, I would like to invite the Lord Mayor of London. Alderman Vincent Kiveney was elected as the 693rd Lord Mayor of the City of London on 29 September 2021 and took office on 12 November 2021. Vincent is a partner in the international business law firm DLA Piper. He advises on debt capital markets, structured finance, and securitization transactions in the UK and banks, financial institutions, and corporate clients in the UK, internationally on banking, finance, and capital markets transactions. His mayoral theme for the year is People and Purpose, Investing in a Better Tomorrow. He will champion a purpose-led and people-focused UK FPS sector, growing the global competitiveness of the UK as a world leader in ESG and sustainable finance and home to the best and more diverse global talent, driving social mobility at all levels. Over to you, Alderman.
Thank you very much, and good morning to everyone watching in the UK, and a good afternoon to everyone watching in India. Thank you to Mint and to the Department for International Trade for hosting today's discussion on sustainable finance, raising funding through the UK capital markets. And thank you to all the participants for joining. I look forward to hearing your insights. Climate change and sustainability are the biggest challenges facing the international community for the next decade. Financial markets are critical to lowering the costs of clean technologies and enabling business to transition at scale. Public finance is essential, but we know from estimates from the International Energy Authority and others that it will not be enough, which is why we must mobilize private capital as well. There's a big opportunity for India to align this growing supply of capital with its sustainable financing needs and projects. India has set ambitious emission reduction targets, backed up by the Indian government's issuance of green bonds. According to estimates by the Indian government, the country needs to invest $4.5 trillion over the next 10 years to meet them. This will require alternative sources of sustainable finance, as well as the traditional route through banks and balance sheets. Innovative financing mechanisms must adapt to the Indian investment landscape, while sustainable investment opportunities in India need to be made more visible to international investors. The unique UK-India relationship can support India in its decarbonisation path. The UK is a one-stop shop to support the transition to a low-carbon economy, find green tech solutions, restructure business divisions, and raise capital. It has a strong track record of supporting emerging market project developers and governments. The City of London is home to the world's most internationally connected markets, deep liquid pools of capital, and an array of professional and business services. To raise the investment needed for India's transition, we must connect to the UK's innovation and connect that with India's dynamism and industry. The City Corporation is partnering with high-growth markets like India to scale the pipeline of bankable, investable green infrastructure projects and build confidence in the investment community. COP26 highlighted the global spirit of collaboration and the urgency that had been missing. It's vital that we don't let this pass. And I have faith in the UK and India that together we won't let this pass, but we will work in partnership to provide the capital, advisory, and transaction services needed to facilitate our transition to a sustainable shared future. Thank you.
Thank you, Alderman Kivini, for those insightful opening remarks. It's a great reminder of actually how both India and the UK are trying to determine how to embed sustainable finance in core DNA. And to shed light in more detail, we have a meaningful panel. Please help me welcome Arun Sehgal, Managing Director and Head of Global Finance, Barclays Bank PLC India, Nilofer Lamb, Partner, ZBA Law Firm, Rajiv Anand, Deputy Managing Director, Axis Bank, Shrey Kohli, Head of Debt Capital Markets and Fund, London Stock Exchange Group, and Tarun Sharma, Chief Financial Officer, India Exim Bank. It's my sheer pleasure and privilege to welcome you all to this roundtable. We are still waiting to have Rajiv join in. By the time he joins in, let's begin the questioning. And I think it's a great idea to begin the roundtable with an open question, really, on decoding the importance of sustainable investing, which has been growing rapidly in the last couple of years. My question really is that why do you think a growing number of institutional investors and funds are incorporating ESG into their portfolios? And how has really the global investor perception of sustainable finance evolved? Maybe Shrey, you can begin with this. I'll get on to Arun and Tarun. Yes.
Thanks so much, Shrija. And thank you for having us at this panel today, at this very distinguished panel. So I think to answer your question, in the last 10, 15 years, ESG has very much moved from being a niche investment matter, very much within the corporate responsibility perspective, to facing one of the largest challenges that we face as a generation globally, which is how do you get to net zero? How do you remove 51 billion tons of carbon in the world's atmosphere and move to a world where you are balancing sustainable economic development in a manner which is relevant to countries across the world, but not contributing to an increase in temperature. So if you look at the way investors are incorporating ESG within their investment decisions, it is increasingly significant. There are over $100 trillion across the world aligned to the UN PRI, the Principles for Responsible Investment. There are over $40 trillion now aligned to the UN SDGs, the Sustainable Development Goals. There's over $1 trillion of green bonds, social bonds, and sustainability bonds which have been issued in the market, and more so since the pandemic, particularly in the social bonds perspective, because that has enabled us to fund the medical research and the investments required for significant vaccination programs. So this is a significant macro trend, which is going to continue until we hit net zero and we reach a just transition. And the other factor which is important is, there's increasingly a body of study where ESG is equal to better performance. If you look across markets, whether it be equity markets, fixed income markets, it's very clear now that those companies which are performing better on their disclosure, which are funding themselves with sustainable finance instruments and are making commitments on their carbon pathways to net zero, are definitely the companies which are performing better. And it's our privilege at the London Stock Exchange to be host to 1,500 issuers globally, a number of Indian issuers who've issued within sustainable bond markets, including the likes of Exim Bank and Axis Bank, who you have on this panel, and partners with, of course, ZBA and Barclays.
Thanks for that, Shrey. I come to you now, Arun, taking it further from what Shrey just mentioned. I mean, he used a few words that it has definitely evolved from being a pretty niche investment matter to what really is the cause of concern for all of us globally. I mean, how to get to net zero. And it really is the mainstream agenda in all corporate boardrooms. But he also highlighted the fact that there's enough research and body of work and historical data to also show that ESG also leads to better financial performance, and that perhaps is a great financial incentive for investors to push for ESG so much in their investments. What really is your viewpoint in this direction?
Thanks, Shrija. Thanks, Shrey, for your comments. It's a pleasure to be on this panel. Greatly appreciate the opportunity. I think from our perspective, honestly, the ESG trend is currently reversible. As was said by my fellow panelists, from an awareness issue, it's become an existential issue, where not only investors, providers of financial capital, but also corporates are now fully aware of the need for transition. And this need is not a good to do; it's a real risk matter, where at this point of time it is essential for all economies, industries to move towards this net zero target. And I think what you're finding across of course the ESG markets, where issuance volumes came up to $850 billion last year, which is a 50% year-on-year increase in the way investors and funds have to now really determine and provide their plans around ESG and green investing, that this trend is here to stay. What this really means for everybody involved, whether it's providers of capital or corporates or anyone in the economy, is everybody needs to be proactively thinking about how they get to that point. And I think this panel, the City of London, banks like us, Exim, are all here to actually be part of that solution, which is how do we get people from where they are today to net zero and transition that in a manner which is economically feasible. But in a summary from our standpoint, this is an economic imperative now. This isn't a awareness or a good to do imperative.
That's very well said. The needle has definitely moved significantly from a very good to go imperative to a must have economic imperative. Tarun, what really is your viewpoint on sustainable financing and the way it has evolved and its increasingly growing importance?
Thank you, Shrija, and happy to be here on this panel with my esteemed fellow panelists. If you go back, if I were to become a little philosophical, nature always has it in terms of reduce, reuse, recycle. And I think that's where the word sustainability comes from. How do you be sustainable, not only in terms of, we spoke about financial performance, but also in terms of how we use our resources. If you look at global estimates, McKinsey came out with a study and mentioned that we will need about $275 trillion to achieve net zero by 2050. So on one part, we're talking about how do we move, nations are making commitments. On the other hand, you have regulatory compliances now. So people are moving from voluntary compliances to mandatory compliances. You've got some of the best standards now being set up by IFRS, which is getting in high quality sustainability disclosures coming in. So people are moving both in terms of the recognition of how sustainability can help in terms of impact financing, in terms of what we ourselves do as corporates or institutions, and second in terms of what the regulator desires us to. So it's a mix of both. Progress is going to be slow. I know the needle has moved, but when you talk about across the globe, we will need to see how we slowly transition into this space. It's not going to be leapfrogging into a newer technology and moving in very, very rapidly, but it's going to be slow and gradual, and we need to sort of take people along as we go. And as a development financial institution, I think our role is how do we get everybody on board and move in one particular direction. I'll take a pause here now. Thank you.
Thanks for that, Tarun. Sort of a meaningful insight coming here that it would not necessarily be leapfrogging the way. It will be slow and steady, is what his viewpoint is. So, can one really say that is sustainability the new digital? I mean, is that how investors are looking at it? Nilofer, what really is your viewpoint here? I mean, if I take Arun's viewpoint, and he said that we are seeing 50% year-on-year growth in new issuances. Now, that is pretty large sums of money at stake that we are talking about when it comes to sustainable financing. So, when you have such unprecedented interest from investors, there are also increasing concerns about greenwashing, for instance, right? And the legitimate concerns around that. So, my question to you really becomes that two questions. One, what do you think when you talk to investors? Do you think that they are looking at sustainability as the new digital, the way digital revolution opened floodgates of capital for them? Sustainability would be that. And second, what do you think is the range of legal and regulatory initiatives to support and reinforce healthy trends and ESG metrics? And we'll spend another 5-10 minutes on greenwashing here. Yes, Nilo. Nilofer, you're on mute.
Sorry. Good afternoon, everyone, and thank you to the Department of International Trade and Mint for having me on this panel. And it's a pleasure to be on with my esteemed panelists. So I think in terms of some of the questions that you raised, I think in a way, obviously everybody has talked about ESG for a long time, and it's suddenly gained this massive momentum, I think, in the last year, 18 months. Particularly, I personally feel on the India side. And every other second day in the newspaper, there's something new on it. And I think that my personal view is that I think probably 50% growth year on year will be an underestimate over the next 3 to 5 years. Partly because, if we actually have to achieve the targets as a country that have been set, whether it's getting to net zero by 2070 or the targets that we have for 2030, it actually requires everybody in the ecosystem to kind of be in sync. And that actually is going to require a lot on the investment side, the capital investment side, the regulatory side, many different sides, which I think is actually going to propel us now in a way, and perhaps in a way faster than what digital did, because here we have a greater impetus and there's a need, whereas digital in a way, although there was an impetus, it happened at its own pace. So perhaps to go into some of the challenges I think that we see, I think there needs to be perhaps more awareness building on the domestic investor side in India. So as people must be aware, SEBI's come out obviously, and there's a business sustainability report and companies have to report on it, etc., which is great from a disclosure and an awareness and from a corporate perspective for people to do more. I think that now there perhaps needs to be a little bit more on the investor side, because we need to put capital to work, right, over the next 10, 20 years. And that capital needs to be funded both domestically and internationally. So I think that there are some regulatory changes that need to be made. Clearly, I can go into that in a little bit more detail if you'd like. I think the second thing is that we can make changes on the CSR side as well to incentivize those investments. The third is I think we need tax changes to, again, incentivize investors to come in, particularly perhaps on the retail side as well. And fourthly, and I think we're already well on the way to this, we've seen, obviously, banks are on this panel like Axis and Exim being incredibly innovative in some of the transactions that they've done, whether it's Axis Sustainable Bond or Exim when they did the green bond 4 or 5 years ago. I personally was involved in the NTPC Masala bonds and the IREDA bonds 4 or 5 years ago as well. So I think we need more product development, and I think that we need that product development to be more bespoke to the types of renewable energy or sustainable projects that there are. And I think that will also be something that we will need to do over time.
Thanks for that, Nilofer. We will sort of definitely get on the subject of greenwashing, and I would love to hear what is the view of the panelist on that. You spoke about quite a few things, and you got the names of Axis and Exim Bank here in terms of the innovative solutioning that they provide in terms of green infrastructure requirement. And I see Rajiv has sort of joined in. So my next question is a great segue sort of from where you left, is that the challenge for infrastructure for India essentially is not really the same as we see for other G20 countries. I mean, instead of an infrastructure transition strategy, India clearly is in the need of a more infrastructure creation strategy. So the question really becomes that how does one think that India can directly move into this paradigm for circular economy infrastructure, and what can be the long-term investment in greening infrastructure? Do you think there's sufficient liquidity in India's domestic capital markets to finance its wider sustainable needs? And how does one think it should be harnessed? I think I would like to get Rajiv's your view and Tarun's view on that from an India domestic capital markets perspective, and then perhaps also get Shrey and Arun to chip in on this one. Yeah, Rajiv.
Uh, Good afternoon, everybody, and thank you for having me here. I think the fact that we need to green the economy, I think, is not questionable. I think there is enough money globally, not just in UK but across the world, in lying in ESG funds, looking for a safe home. And I think, in a sense, India does provide that opportunity um, to global investors. We have already seen that happening over the last year and a half, where numerous transactions have happened. Within the green space, Access itself uh, did did India's first and probably Asia's second sustainable 81 bond. The kind of pricing that we got there was very, very tight and among the best, for the rating that we are at. So therefore, I think what we're clearly seeing is that there is enough money that is available, and I think for us here in India, the availability of opportunities to invest that, whether it is in renewable, whether it is in creation of a green economy as we transition away from coal into renewables, wind, solar, etc. In the space of affordable housing, in the space of EVs, I think the size of the opportunity to invest, and more importantly, the ability to find credible sponsors, for each of these initiatives is not in question. And I think we are certainly going to see, more and more such opportunities as we get into the future. But really, the question, therefore, is what is sustainable, what is green. I think there are different definitions of this across the world, and I do appreciate the fact that regulators across the world, including in India, are coming up with taxonomy which is more credible, which is more easily understandable. And because I think ultimately it is important for all of us to be on the same page on this whole issue. Um, and and I think, this is early days, which is why we are having these conversations around greenwashing, etc. I think this will very rapidly die away in the months and years to come, because I think more and more institutions across the world are beginning to realize that greenwashing has its own implications, negative implications, for the particular institution, and going down this road is not going to be useful at all. And therefore, creating the a credible taxonomy that is easily understood by everybody on the investor side, the issuer side, and sort of arrangers like us, becomes very, very critical. But I just want to leave it at this point here, that I think there is something in the vicinity of about 25 to 30 trillion dollars lying in ESG funds. So therefore, availability of money is not a problem. um, the number of opportunities that are available in India to invest that, I think, is huge, and we will certainly see that money coming into India in the years to come.
Thanks for that, Rajiv. Tarun, I would like to get you in here. Rajiv's points are very clear that floodgates of capital definitely have opened. It's a huge avalanche of capital. When you just talk about greening of infrastructure, 25, $30 trillion is a number that is about live. As I said, the opportunity set in India is huge. There's no dearth of capital. So whilst UK brings some strategic advantages to itself globally, the capital is huge when it comes to ESG. So my question to you really becomes that uh, what really is the challenge then? Everybody talks about the opportunity set, that India has this huge swath of opportunity. Talk about affordable housing, construction of highways, we talk about green infrastructure. So what really is the challenge that one sees in greening of the economy in India? Yeah.
I couldn't agree more with what Rajiv mentioned. And let me just step back a moment and talk about some more numbers. Now, I did mention about 275 trillion required globally. Now, if you look at it in the Indian context, we are talking about net zero by 2070. So we could require investments to the tune of $10.1 trillion. How much did we issue in terms of green issuances or ESG issuances? We've grown from 1.3 billion in 2020 to about 9.4 billion in 2021. So we've made a small dent. Uh, there is a lot of global capital required to come into India. And one example of that is if you look at Exim Bank itself, we've done 7 listings in London Stock Exchange worth over $5 billion. So that speaks about how much we are getting in global capital for development needs across the globe. In terms of where we are, a lot of opportunities, but not enough happening. I'll take you to a small example of solar. Now, India started off in a small way. The market has developed, the technology has developed. So the cost of setting up a 1 megawatt power project in solar has reduced dramatically. The tariff costs have come down. What has that led to? 40% of your power needs are coming in from solar. So you've got approximately 157 gigawatts of installed capacity out of the total 391 in India itself. And we are looking to have replicable models of this experience in partner developing countries. So it goes into how does technology evolve? Rajiv spoke about EVs and the great opportunity there, and we've seen the bell curve move. The curve move there as well. The technology is changing rapidly. I remember many moons ago we supported Mahindra for their venture into the electric vehicle space called Riva, and we've come a long way from then to now. You've seen how India's progressing where Europe is now. Europe is way ahead, but there's a lot of progress that India is doing. But technology also needs to play its role. So as we move ahead, I think, and as technology comes into play, we will get those opportunities and move into faster implementation. I just
So
want to
thanks.
make one point,
Yeah.
Shrija, in terms of not just the larger cities or the bigger markets within the country, but even in terms of smaller communities. How we're looking at circular economy there. So we are working with our development partners even in areas like the Northeast and using that to develop ecosystems that have a circular economy. So it has to play a role even in those markets, in the smaller spaces. Thank you.
So Rajiv, I would like to bring you in here, Tarun, taking Tarun's point further here, and he outlined sort of the capital requirement and how perhaps we have made a small dent in terms of issuances, but the opportunity set is so huge. But tell me one thing, what really is the challenge that you face as an arranger of the green bonds and issuances on behalf of your clients? What really are 2 or 3 key stumbling blocks in that area?
So I think we've established beyond reasonable doubt that there is enough money that is available. One of the things that is constraining is obviously our own country rating. As a result of that, the relatively risk averse customers or risk averse investors are not able to invest in India. Second is, yes, I think if you look at the BSE 200 or the top 500 companies in this country, we are seeing that, I mean, they've been putting out sustainability reports for the last many years. And as I talk to my clients across various industries, steel, cement, even thermal power, for example, their understanding and, more importantly, adoption of ESG principles is very, very strong, and each one of them is ensuring that they're meeting meeting global standards, etc. So I'm not seeing too much of a problem in terms of adoption of ESG at the sort of the large company level. But the problem that we have is, remember that we have 6.3 crore MSMEs in this country as well. Out of which 96% are micro entities. They don't have the balance sheet. They don't have the wherewithal to understand ESG and adopt sort of the SDG principles at this point in time, and therefore it is incumbent upon us to ensure that we are creating structures, first and foremost creating the education, that it is very important even for the smaller entities to adopt this, if as a nation we want to meet the requirements by 2070. Therefore, what we are, for example, working on is to work with multilateral agencies who want to actually participate in a space like this with guarantee structure. So we're working with the likes of Garenco and ADB to create guarantee structures, which where they take the first loss, or various structures of that nature, where we are then able to identify green opportunities, not within the large corporate space, but within the MSME space as well, and look at it from a more, not necessarily on an individual transaction basis, but as a portfolio basis, and uh, look to create guarantee structures around that, which then become that much more viable, as a bank, as a lender, where some element of that risk is shared with some of these multilateral agencies. It's a win-win situation. The MSME starts to get funding for some of these initiatives. The bank is able to grow its balance sheet on a relatively lower risk basis, and multilateral agencies are able to deploy money in countries like India, where they really want to. And like I mentioned earlier, the size of the opportunities are quite large, but it needs to be relatively safe, and structures of this nature certainly help in that sense.
Thanks for that, Rajiv. Some very meaningful point came here from Rajiv and Tarun in terms of opportunity and challenges. Of course, a recap, operational challenges, very well said, our own country's rating. And of course, the understanding, if you look at the BSC 200 companies, they have been coming simply reports, and now more so with SEBI, the domestic markets regulator, Security Exchange Board of India, adopting a very carrot and stick approach that you have to come up with the sustainability disclosure by a stipulated period of time. And third, really the cost factor, which often gets neglected. You have this large swath of middle and small micro enterprise opportunity. How do you make this understanding about ESG much more relevant and perhaps low cost for them? Shrey, I would like to sort of bring you in here that you heard from both Tarun and Rajiv in terms of product solutioning also that they're offering. And it looks like a very interesting product solutioning, especially for the MSME sector. My question to you really is that from an international markets perspective, from London, how do you think it can serve as a robust financial aggregator and facilitator of large scale capital investment in a potentially sustainable and growing India? And when you talk about the whole SWAT, not only the large pack here, but also for MSMEs, what really is the solutioning here from that perspective? Yes.
No, thanks, Shrija. Look, this has been a really insightful discussion. So I'm going to touch on a few points before answering your question specifically. So look, if you look at the growth within sustainable markets globally, even on the London Stock Exchange's sustainable bond market, you saw 4 times the amount of capital raised in 2021 compared to 2020, and 2.5 times the number of bonds. And increasingly, you're seeing more sovereigns, more municipalities, more companies and sectors which are highly emitting, whether it be steel, whether it be cement, whether it be transportation, whether it be retail, whether it be consumer. So there is growth. But to come back to the challenges, Tarun mentioned that to reach India's infrastructure requirements for the next 10 years, it's $5 trillion. That's about $500 billion a year. That's greater than the size of bond issuance in India last year. That's also pretty much similar to the size of the LSE's debt markets in terms of annually supporting issuance. So there's no underestimate on the scale of capital that you need to mobilize. So the fact of the matter is that both domestic and international markets must be complementary, right? And I think this then goes to your question about how London can be a facilitator of that capital. We have supported a number of Indian issuers to raise bonds, as well as to support how they articulate their proposition within global markets. What we have seen consistently is that when issuers tap the market in London, it leads to a very globally diversified investor base and a awareness of your strategy that is difficult to get if it's just focused on domestic markets. Rajiv mentioned credit enhancement and partial guarantees. Some of the work that we've done over the last few years has been with entities like the International Finance Corporation, the World Bank, the Asian Development Bank, the Randco, Exim Bank as well, so that you widen the range of issuers who can come to the market and deal with the pricing challenge that Rajiv talked about. I had the opportunity to chair a City of London, India, UK capital markets working group with Professor Anant Narayan from SPJ. And one of the issues that we looked at was how do you widen that issuer base? And last year, 15 Indian issuers issued within green bond markets. That's not even the BSE 200. That's not even the top 200 companies in India. So that's one challenge which the market needs to address, is looking beyond the top 30 companies and how more entities get access to capital markets. And look, that's a challenge both domestic and international, and that's certainly an area where London can support.
So Rajiv, but the point really is that, to what Shrey also mentioned, that of course the capital requirement number is known, and there are various estimates which put out number of billion trillion of dollars. But isn't there an over reliance on external capital then? Isn't there an over reliance on global capital? What is the role our domestic capital markets are really playing in facilitating green finance? Do you think that are we doing enough for green finance and mainstreaming of green finance from an India domestic capital market perspective?
Fair question. I think if you look at the pools of money that are there, for example, with the mutual funds in ESG funds, yes, it has grown dramatically on a year-on-year basis, but of a relatively low base. But I think you're also now beginning to see banks making commitments over the next 5 years in terms of how much money they're going to put out in green financing. Axis Bank itself, for example, has put out publicly that they will disburse 30,000 crores to green assets over the next 5 years. If you look at it relative to the portfolio that we have currently, I mean, it's effectively, in a sense, doubling from where we are today. Similarly, there is also work that is happening in terms of creating a negative list, in terms of the types of industries that banks and financiers will not touch. And I think, for example, if there is a new thermal project that is being set up, it is not going to get money, whether it is going to come from the equity or the banks or the capital markets. Projects of that nature will not get money at this point in time. So therefore, I think you're already beginning to see that there is pools of money that are getting created for green financing. Having said that, I think it's important also to understand the fact that Indian bank balance sheets are probably in the best shape that they've been in a decade. They're well capitalized, and this is not just private banks but public sector banks as well. The NPA recognition issue is well and truly behind us, and therefore Indian banks are looking for growth opportunities within the green space and otherwise as well. So, to me, Srijan, availability of liquidity is not a problem. I mean, whether it comes from an ESG pool or otherwise is a separate issue. But the availability of green availability of liquidity for bankable projects, I don't think is an issue at all, especially for credible sponsors.
Thanks for that, Rajiv. Some important points that sort of you mentioned, Tarun, I wanted to bring you in that, of course, the growing base of ESG mutual funds, albeit in a smaller base, but that number has been growing. I spoke about the fact that 30,000 crore disbursements from Axis Bank commitment for the next 5 years. And this is actually a pretty big number if we talk about, especially in the green projects. And third, you also spoke about the fact that they are creating a negative list, only looking at green or ESG compliant projects. And perhaps if there's a thermal project, it will not necessarily get funded, be it equity or debt. From an Exim Bank's perspective, what do you really think that we are doing specifically on the Indian capital market side? And is it enough? What really is your thought process in that direction? Yes.
On our own side, for instance, we've set up an ESG framework very recently. We've got it certified by a second party opinion provider who says it's credible and impactful. But that's not enough. In terms of how the capital is being used, let me give you a small example of opportunities available. Now, in India, it's very different from the way it is in the developed markets. So we've got one company that we've supported, which is looking to create almost or close to virgin plastic from recycled waste. And what they've done is they've used technology to identify where are these sources of the waste. So going into the hinterlands, going to places like Varanasi, going into southern parts of India, identifying waste sources, and putting them, segregating it, and using technology to create almost virgin-like plastic, which is being bought by multinational companies. That itself is a huge ability of India to move in the space of green. So it's not just the larger projects. We spoke about some very large mega projects in the infrastructure space, but even these small things. In terms of the Indian debt capital markets, we are seeing a number of firsts that we've had. We ourselves, for example, have got our ESG framework, but a lot of other institutions are moving, corporates are moving that space. And investors that are coming in typically are asking that, even if it is not a green issuance, what are you doing in the space of ESG? So automatically that is making corporates or institutions move in the space of trying to align themselves with the requirements of the day.
Thanks for that, Tarun. All of you spoke about the opportunity, challenge, sustainable financing, how it has evolved, what really are the on-the-ground challenges. And she also spoke about the fact that from London's perspective, what sort of they can bring to the table. But in all these conversations, what I found was interesting was this entire issue about how do you use that capital? Where is that capital is being used for? Few years back, every company was trying to position itself as a technology company. If you're a real estate company, you're a real estate tech company. You're a food company, you're a food tech company. So every company is a tech company. I'm seeing the same thing happening, especially in private markets now. Every company is a green company, as if this is the new labeling that is happening. Also, to sort of get money from the investor, that is from the company's perspective, and from the fund's perspective, from the LPs or limited partners, because if you label yourself as a green fund or an ESG fund, perhaps there's so much locked in capital available there. So are there defined metrics and measurable metrics? How do you measure ESG on a sustainable or measured way? Is there a defined metric for that? And do we need a global standard for it? Do we need a local country standard for it? What really is the thinking or thought process there? Nilofer, I'll begin with you on your ideas and go to Rajiv, Tarun, and Arun and Shrey on this. Yes.
Sure. Thank you. Yeah, I mean, well, look, ICMA has principles for all of this. And so, for example, they do set it out for kind of green bonds, sustainability-linked bonds, social bonds. And there are certain kind of benchmarks in terms of how that works. I think we haven't quite replicated out the same similar structure domestically for domestic capital markets. So I think that is something that potentially could be looked at in terms of ensuring that we kind of try and get to a place of parity. And I suppose the other aspect is kind of on sustainability-linked instruments, where there are KPIs. Maybe there needs to be some form of definitely a framework domestically. If we really want to broad base this across equity and debt capital markets domestically plus cross-border, right? So we want to have some form of a parity and consistency, I suppose. So A, makes it clear for investors, and B, also makes it easier for issuers, borrowers, and regulators to maintain, monitor, etc. So I think that is an area where perhaps there could be some additional blue sky thinking and then implementation.
Okay, thanks for that, Nilofer. Arun, what about you? Dispatch for the regulator from the greenwashing perspective, and how do you address that?
Yeah, I mean, and I wanted to add a couple of points to your previous discussion as well. I think at the end of the day, uh, India, first of all, I think going forward, all finance in some sense will be green finance. Because I think everybody will have to ensure, as Rajiv pointed out, that you're not financing things that are not climate friendly. From an India standpoint, I think we have some issues. One is the capital market, honestly, at this point is underdeveloped. So this transition at this point will be chiefly financed through banks as well as international capital markets. What we need to do as a country, and this goes to your question on greenwashing, is two things. One is we need to be aligned. There is a lot of work going on in the EU, in the UK on the taxonomy. There's a lot of work going on disclosure requirements for banks, funds, and corporates. And there's a lot of work also going on in terms of just how you engage with the international investor community. I think it's really important that the frameworks we set up as a country are globally aligned if we intend to continue to attract global capital, which we do think will be needed. Uh, the other thing, of course, is from a regulatory standpoint, when it comes to infrastructure and green infrastructure, a stable regulatory regime, and not just financial regulations, just the infrastructure regulations, is critical. And to be honest, India has been doing a great job of that. And all of that is translating into volumes, coming into India. As was pointed out by Tarun, we had $10 billion of issuances last year, which was 50% of green issuances last year from India, of which Barclays actually arranged over 80%. And that was 50% of India volumes. But that's still only 1% of the global issuances. We're actually behind countries far smaller than us, which means there's a great opportunity provided we can continue to make sure we are globally aligned with taxonomy, disclosures, and do not come up with an Indian standard. And I think in parallel, the Indian capital markets need to continue to develop for green finance, for long-term finance. I think insurance companies need to come into this at this point of time. That kind of finance is just not available.
That's very well said. Definitely needs to be a lot of effort from the Indian capital market side also. Rajiv and Tarun, yes.
I think the question that you are asking, in a sense, has been answered by Tarun. I think it's important to create a framework, get it approved or audited by a second party entity which is credible, which brings credibility to the framework. We used Sustainalytics, and the structure that we created and was in a sense seen by Sustainalytics was good enough for 50% of the money that came from ESG investors in our 81 issuance, for example. Second is what Access has done is we have elevated the whole conversation to the board level. We are the first bank in India to create a ESG committee of the board, and so therefore we get direction, from the board, and so therefore to that, in that sense, we work very closely in the adoption of the IFC Washington principles. We work with IFC Washington. It certainly helps that one of our board members is IFC Washington alumni, and so therefore being able to think through some of the issues which are in a sense on the borderline with IFC Washington has certainly helped us evolve a framework for ourselves, which is which meets to a very large degree the requirements of global investors. But at the same time, I think it's very important for us. We are a meaningful player in the Indian financial services environment, and it is incumbent upon us that we serve the needs of India and not necessarily just our global investors. And it's really that balance that we are looking to find as we evolve within this space.
Sure.
Just
Tarun,
Srija,
yeah.
perhaps I
Yes,
can
yeah,
just
yeah, sure.
add a
Yeah.
point to that. Tarun, sorry for jumping in, But I think what global investors are looking for is some form of consistency. But consistency doesn't mean that you have to boil the ocean and create one global taxonomy. What we found is that taxonomies need to suit the local context, right? And as Rajiv said, the fact is that all the institutions over here collectively are looking to serve the Indian consumer, the Indian industry, whether it be in domestic markets and international markets. So, two areas where, we have worked very closely with regulators, and we're working very closely with SEBI, we're working very closely with the Monetary Authority of Singapore, we're working very closely with the EU Commission and the UK, is on how do you deal with cooling in countries which are warm, and how do you deal with heating in countries which are cold. Now, both of these are transition issues, right? They have to be addressed by a taxonomy. As long as there's consistency in terms of the way that they're treated, then global investors can view these, investments made by companies or investment decisions made by companies in a consistent manner, right? So that is a good outcome out of the taxonomy discussions in India. To Nilofer's point, there are global voluntary principles on the ICMA side, the International Capital Markets Association, which have very much driven the development of green, social, and sustainability bond markets, right? There's a question as to how much that needs to be incorporated into local rules. What we have done at the LSE, for example, is we have made ESG data for all companies available to LSE issuers without any cost. So if you're an LSE issuer, you get a database of 10,000 companies globally, 150 data points on each of those companies, and you can basically compare yourself to your peers on a global basis and see what your peers are doing. That is to incentivize better disclosure, because if you provide better disclosure, there's better data, and therefore there are better investment decisions. We have marks like the green economy mark, which look at where companies make their revenues from. If more than 50% is from green sectors, they're given a green economy mark. We see companies globally using that in their IPOs. Tirupati Graphite from India is a company which has utilized that on the LSE's markets. And in addition to our green bond segment, we also have a climate transition segment of our bond market, which is really looking at companies which are from hard to abate sectors, which are key to the transition, driven by ICMA principles as to how they deploy capital and what carbon pathways are they between now, 2030, 2050, and 2070. And for markets like China and India, which have slightly different pathways to global markets, I think those frameworks become incredibly important. So yes, there are challenges, but as long as there's consistency globally, and this is another area where I think we as the London Stock Exchange and as the UK financial community are critical partners, I think, for the Indian regulatory community and Indian financial participants.
It's a lot of sort of dispatch going for Indian regulators here in terms of what really is the ask and where they can better themselves. Yes, Tarun, from a regulatory perspective in terms of addressing the greenwashing challenges. Yeah.
Right. One point here I'd like to make is that no one size fits all approach. So it needs to look at what is the question, what is the problem, and how do you solve it. Rajiv did mention about IFC, and it's interesting. I was thinking about IFC as well. They have impact principles set in place. There are 140 public and private sector institutions that are now following these principles. We also heard Nilofer talk about the other principles that are globally being made available, and these principles are now getting embedded into ESG frameworks of institutions. So it's moving in the right direction. What we are also doing is we are looking to partner, and Rajiv did illustrate that earlier on partnerships with ADB and the others. And just to name a few institutions, we've worked with FCDO, DFID of the past, and JBIC in Japan, AFD from France, the European Investment Bank, Barclays itself, and the kind of learnings that we've had in the whole space of how do we use, our existing resources to fund projects in the sustainable space. How do we get more investors coming into making investments or looking at us? Interestingly, I mentioned about 7 issuances at London Stock Exchange, but what we've also done is we've moved into areas like Afrinex, which is a new stock exchange in Mauritius. How do we help them also graduate and move up the value chain? So as we learn, we are trying to look at helping others also use some of these learnings in other geographies. Thank you.
Thanks for that, and what a meaningful discussion. So many meaningful insights coming to the fore, really. I'm just taking the conversation a little forward here. In terms of sectors, so what sectors become non fashionable now? Is it really fashionable even in 2022 to be an entrepreneur of an iron and steel company? I mean, the first image is of the blast furnace emitting so much of heat in a steel plant. Even though not many people really know, steel is the most recyclable material in the world. It is used across industries. But the entire idea on how steel is produced, the process, involves a lot of heat. And India has a lot of steel plants. So when you talk about this decade, 2022, what really, in terms of sectors in ESG, what becomes fashionable, what becomes non-fashionable? And how do organizations think about that bit? Rajiv, Tarun, any viewpoint in that direction in terms of companies coming to you, approaching to you? What really are you seeing in terms of how the management or boards are thinking?
I think of this as transition finance rather than climate finance. I think let's not look at this at a point in time. If everybody starts to stop producing steel, you won't have cars. So forget about IC engine cars. You won't even have EV cars. So I think let's not underestimate the work that iron and steel companies and cement companies are doing in terms of their commitments around ESG. They are as committed, if not more committed, than anybody else in the globe to ensure that what they are producing is not in any way adding to the carbonization of the planet. There is investments on FGD, etc. And I think steel and iron and steel companies and cement companies are very well recognize their responsibility to a cleaner planet. And I think it is going to be it is boring, but at the same time it will be fashionable. It was fashionable yesterday, it is fashionable today, it will be fashionable tomorrow as well. So in that sense, in fact, I have a bit of a problem with the word fashionable itself. In, I think it's really, we got to think about this as a transition. Remember, even in India today, 65% of the power that we produce is still coming from thermal plants. I mean, you shut it down tomorrow, you won't be able to charge your mobile phone or charge your EV station, for Christ's sake. So I think one's got to think of this in terms of transition, and each industry in turn will have a requirement for green financing as they convert their dirty part of their business into clean. And that's really the way
Yeah.
that you're going to think about it, and it is going to produce new opportunities, new jobs, new industries as we go forward. So I don't think it's about what are the various industries that we are going to shut down. Rather, the way I think about it is what are the new industries and new opportunities that could potentially come up as we transition into a green economy.
That's Arun. I would like to bring you in here. I think Rajiv has a problem with the word fashionable, and he sort of categorically is mentioning it's more about transition financing and not really dying of one sector and sort of opening of the other. But in terms of your issuances and the key part and the key role that you played in terms of us. So many issuances are taking that to the global world. What really are you seeing from investors' interest in terms of sectors, in terms of their understanding from an ESG perspective? Is technology really the one, is the underlying component attracting a lot of institutional investor interest? Are some of these old age traditional companies also very interesting as an idea? What is the sense that one gets?
No, actually, we couldn't agree more with Rajiv. To be honest, as an institution, not only for our own balance sheet, but even as an arranger of capital. At the end of the day, each industry exists today because they fulfill an economic requirement. And I don't think those economic, whether it's power, steel, cement, all of those economic requirements will continue and, in fact, grow for a country of our nature. What I think investors are only looking for is what is the transition plan. And at the end of the day, for a country like India, it's also got to be affordable. I think it cannot be unaffordable given the state of economic development we are in. So investors are looking for a recognition and a transition plan for which honestly capital will be available. In fact, things like steel, cement are hard asset businesses providing multi-decade certainty of cash flows, which are always been interesting to investors, as long as they have a credible transition plan, which frankly investors will continue to support in a large, meaningful way. So far, green has been about powering renewables, but I think transition finance is actually going to be, as Rajiv said, a big part of the market. And I think what we will need is regulatory support. India alone transitioning for global sectors like steel may not work. So we'll have to carve our own path out. But all of these industries are important. And as an institution, we believe it's important to retain them within the financial sector. If you start financing these industries, they're going to finance from private pools of capital, who would have even lesser disclosures and even lesser control. You rather finance it on the London Stock Exchange and have the necessary disclosures and the transition that you can observe than moving into private capital if everybody switches off. So we're quite clear on how we think this evolves.
Share any thoughts here?
So look, I think we agree, and at the London Stock Exchange we understand, which is why we've set up a dedicated climate transition offering for companies, because at the end of the day, if you look at two companies from India which issued sustainability-linked bonds last year, one was Jindal Steel, and the other one was Ultratech Cement. Now, these are the types of sectors where investors and companies globally are looking for, what is your disclosure? What benchmarks are you setting in terms of emissions, in terms of the percentage of scope 1 and scope 2 emissions, what type of power you're using, what types of sources you're using, for example, green hydrogen. And ultimately, if you look at the challenge being 51 billion tons of carbon being removed from the environment, these sectors are key to removing those challenges. So yes, I think, rather than looking at haves and have-nots, you have to look at spectrums of green, and within that context, you need to have investment decision frameworks for what companies are on the right pathways and what companies are not. And at the end of the day, investors will decide not to invest in those companies which are not on the right pathway and to put money to those companies which are transitioning, just as Arun mentioned. We work very closely with investor initiatives like the Climate Action 100 Plus and the Transition Pathway Initiative, where the LSE has actually made a donation to the other LSE, the London School of Economics, to widen the number of companies covered by the Transition Pathway Initiative from 400 companies globally to 10,000. And to provide a public framework for investors to look at, what is the quality of management disclosure and what is the carbon pathway analysis. And all of us are financiers in some form, all of us are tech specialists in some form. I'm very convinced that all of us will become climate specialists or in the long term, because that is what is important for the world, and increasingly is becoming a part of our day-to-day or our business as usual.
I can already see that. I think the one phenomenon which is really playing out in the private markets, the private capital market space, is definitely this unicorn obsession. Everybody wants to invest in a unicorn. Entrepreneurs want to become a unicorn. 3 years of starting the organization. For some, the bar is even lower than a year also. I've seen with young tech upstarts. Talk about this entire idea of the return, the hurdle rate, the return when it comes to ESG for private investors, or the investor expectations when it comes to returns from this sector. Will we see more and more unicorns coming from this space also? And some of these large digital industries, like the way they are en route to a digitalization path or digital transformation path, I also see them being on the decarbonization path, as some of you sort of mentioned. So how is this unicorn phenomenon also set to play out in this new asset class, the sustainable finance or the ESG? Who would want to take a stab at this first, and we can get to the other panelists also for review? Yeah. Arun, you want to start on this one?
Yeah, sure. I mean, first of all, the unicorn take a lot of headlines, but the reality is you have more capital flowing into renewable companies and other equity capital flowing into all of this as a sum total, and I don't think it's necessarily comparable. The reality is, technologically, actually, India is doing not as much as it should be. compared to what's going on in EU and the US. And I think our requirements at this point are really setting up of large scale infrastructure, which can provide effectively green solutions at a cost which is economical. We are blessed with a country of scale, landmass of scale, where something like this is possible. And I think you are finding a lot of equity actually flowing into these spaces. And that is in the traditional industries, and for unicorns to be created. When you look at companies like Renew Power, it is a unicorn. It's a $4+ billion market cap company, which is absolutely homegrown, but happen in phases. And there are multiple other renewable companies which are providing these solutions, which in my mind are unicorns, but just are not branded as such.
Okay. Rajiv, any viewpoint here on the unicorn phenomenon?
I think the way to think about this is perhaps, yes, there is going to be technology that's going to be involved in, as we think about um, sustainable a sustainable economy. And I think not all technology will work. And so therefore, as you look at the capital structure of some of these entities, uh, I think ultimately, yes, the promoter will bring in his capital. There will be pools of money that will be available to support him or her from the private equity venture capital space. There will be money at the mezzanine space, where investors are willing to take on slightly higher levels of risk. And it's really, when the technology becomes much more evolved, or the cash flows become more sustainable, is when the fixed income market will begin to look at these spaces, including banks. And so therefore there are different types of players who will participate in that capital structure, with different levels of risk expectations and therefore return expectations. So obviously the private equity player will take the highest level of risk, but at the same time, if it plays out, the returns to the private equity player will be the highest, as opposed to somebody who's coming in through bank financing or a bond, where the returns are, in a sense, fixed, and therefore by then the technology has evolved, or the execution risk has been significantly minimized, is really the way to think about it. So yes, there will be unicorns that will be created, but at the same time there will be a very large number of technologies that look spectacular today, but will burn out in the next 3 to 5 years as well. And That's the nature of a capitalist economy. And it's very important for you to better understand the technologies and ensure that if you are a bank or a fixed income player, you are coming in with an understanding of the technology, whether the technology has viability and sustainability over a long period of time, whether the execution risk has been significantly minimized, and whether the project is creating long-term cash flows.
That's a word
Um,
of caution coming from especially the fixed income guys and banks, that you've got to understand the technology and where you're putting money at. There are different kind of investments suited for different kinds of capital structure. Perhaps some tech investments are more suited for VC kind of risk. Some more annuity seeking income are more suited for more fixed income kind of risk. Any thoughts, Shrey and Tarun, on this one, on this entire unicorn phenomenon and the risk return perspective playing out in the ESG space? Yes.
So look, I mean, the risk return point is an absolute critical one. You need to have, different ways of funding different types of entities. Uh, on the LSE, if you look at the green economy as a sector, as in those companies which make the majority of revenues from those sectors which are green, whether they be renewable, they be battery storage, they be clean buildings, that's been the fourth largest sector for equity capital raising in the last 3 years, after financials, tech, and consumer. So this is becoming a growing part of our economy and is a sign of where we're moving towards. Some examples of infrastructure funds, or InvIT type structures in an investment investment fund structure we've seen in London over the last few years include, battery storage, energy efficiency, and clean hydrogen. So that's a way of mutualizing, equity risk for those projects which may be greenfield, some of which may be delivering capital, and create a both equity-like return as well as a dividend yield for those investors who want to participate in these projects. And green economy funds at the LSE are now $30 billion in market capitalization. So it is a growing part of the markets that we offer. We would love to see an India-focused renewable InvIT or an energy efficiency InvIT on our markets, and hopefully that's in the pipeline in the near future.
Hopefully, we get there as we talk about deepening and building India's green financial market, and that could be one of the things that one could do. Let's really talk about what the finance minister, Nirmala Sitharaman, outlined in this budget. That India would soon begin issuing sovereign green bonds for funding green infrastructure projects in order to decarbonize the economy. Infrastructure financing is potentially characterized by the lack of an active corporate debt market, which we all know, and asymmetry of information when it comes to infrastructure projects and the inherent risk embedded. So the question to this larger panel is that do you think green bonds could bridge any infrastructure financing? Is it really can be the beginning of the greening of the finance market for India? And perhaps would this also help in any asset liabilities management issues? I can begin with you, Tarun, get on to Rajiv and Arun and Shrey for your remarks on this one. Yes.
Well, on the what the finance minister mentioned. So there is obviously, in addition to the green bonds, what we're also looking is an increased amount of capital investment, which has grown year on year by 35%. So the government is committed to looking at making investments in the green space as well. In addition, the green bonds will obviously help the capital markets in India. But I just wanted to go back on some of the previous points. One was in terms of the old economy versus the new economy. Now, in the new economy as well, technology continues to evolve. And I did mention that right at the outset that we need to look at transition. Today, when we are talking about technology in the space of EVs or battery storage, all of that at some point in time becomes a waste. How do you handle that? And that's going to be something very significant of a challenge for us as we move along. The second point was on the unicorns, and I think the point on the fixed income was made. The point on the total amount coming in vis-a-vis what is going into other spaces is a unicorn is really truly arrived if the pension fund is investing in them. So pension fund is looking at a nominal return, but it is relatively low risk. So if I am right in that space and I'm there to stay, only then a pension fund will come and make that investment. So unicorns are here today. They are largely looking at the software space. Some of them are looking in the hardware space, but unless there is a sustainability in their operations, it's not going to survive. Coming back to the finance minister, I did mention about the increase in the capital investments in the budget. The green bonds also, this is something that India did look at in the previous financial year. But in this financial year, in FY23, I think we'll see a start there. India hopes to make some baby steps in this direction. And that will add more money coming into this space in infrastructure.
Rajiv?
I think there was a point made earlier that the pools of green money, so to speak, in India are relatively small, and I think it's really to address this issue that the government has decided to issue green bonds, which will then be invested in as we think about transition finance in this country, and it could as the government begins to issue this, it creates the framework, it creates the requisite sustainable finance infrastructure, the taxonomy around it could become a catalyst for the growth of pools of green money that is available for climate and sustainable finance.
Okay, Arun.
No, I think as Rajiv said, it's a great initiative. It's a great start. The government will lead the way in setting these standards. Hopefully, it leads to better development of bond markets around green and more capital flowing in. Eventually, I think what is the need of the country is to continue to attract capital so that cost of financing is sensible and returns on these projects make sense. And all of these are initiatives that help in achieving that objective.
Shrey.
Yeah, thanks, Shrija. So I think what we agree, it's a fantastic initiative. What we've seen in other countries which have issued green bonds is, it helps set effectively a green benchmark curve, which allows, to the previous point we were talking, more corporates to issue in green format and price against that green benchmark curve. So, it'll significantly increase awareness in the market. It'll point towards, where use of proceeds can be allocated, not just by, the central government, then potentially by, municipalities as well. And which will help support, SMEs who are suppliers of those municipalities and effectively, the government as well. So, we think it's fantastic, whether there's an Indian green masala bond component globally, we would be thorough supporters of. But we've been working very closely through our business FTSE Russell in terms of the qualification of Indian government benchmarks in rupee domestically for global bond indices as well, which has been a big issue, which has been discussed over the last few years as well, and that will increase appetite for the asset and Indian government bonds globally with global investors in these green bonds.
Just
Yeah,
a quick
Shrey,
point.
actually, sorry.
I'm so sorry. Just a quick point here is, when you talk about looking at the international debt capital markets, a lot of times issuers are also worried about how investors gauge them, what is the kind of questioning in roadshows. Some of that does not happen in the Indian context, when you're looking at the domestic debt capital markets. And with this green issuance from the government, I think investors in India will start moving a lot more in the direction of asking those kind of questions and hoping that issuers also push themselves to move up the curve.
Shisha, I think you're on mute.
That's a good point. Yeah, Nilofer, you were saying something?
Yeah, I was just going to add to Shrey's point, and I completely agree with it in terms of setting a benchmark. And if we look back, that's kind of in a way what happened early back in 2014. So I'd acted on IFC's masala bond issuance. And it was after that then the framework came out for Indian companies and then obviously some of the banks as well to do masala bonds. So I think it does set a benchmark somewhere. And I think that the government's sovereign green bond will also set a benchmark domestically. And then we may see more than one come out, right? So it'll help bring a level of comfort, both the retail investor level, the institutional investor level, as well as propel more issuers to come out. And I think, again, to the point I was making earlier, it'll help just develop different types of products as well. We've already, I think, seen some green municipal bonds domestically, but I think that the thing that is there right now is that it's just too sporadic. It's just one-off, right? In order for us to get there, we need to actually build a lot more momentum. And I do personally believe that there will be some tax incentives required in the same way that, for example, people have 54 EC bonds domestically, right? Where there's a tax kind of benefit. I mean, I'm not saying you have to continue with it, but maybe just to kickstart the market, to get the awareness, maybe there can be some form of a tax benefit, and that might help as well.
Okay, I think for all these points, to beautifully segue to the last question of India developing a green financial market. And a country as big and diverse as India can bring its own set of challenges, be it transparency, disclosure, lack of pricing advantages, greenwashing, and more. All of you made quite a few meaningful insights that came to the table. If I were to ask all of you one piece of dispatch for the regulator for deepening of India's green financial market, what would that really be? Yes. I can start with you, Arun, and then get on to the others. Yes. Developing a green financial market in India, what would be your appeal to the regulator be?
I think the appeal would be to really bring, whether for financial institutions with capital from an RBI or an IDRA standpoint, to make climate central to how people view and evaluate companies, and from a company standpoint to standardize disclosures. I think a combination of both of these, and I think the RBI is actually already pressing banks in that direction, including us and the others on this panel. And that bank regulation combined with the disclosures and potentially incentives, as Nilofer said, is what's going to kick this all off.
Rajiv?
Already accelerated.
Yeah.
I think we need much greater education around this space. We've got to get our taxonomy right so that everybody understands, is in a sense speaking the same language. And finally, I think Nilofer spoke about incentivization. I think it makes sense for us to think about giving banks priority sector benefits for green financing. Yes, it currently exists, but I think the limits need to be, perhaps relooked at to make it more meaningful. Because ultimately, what is priority sector is really what what are the key priorities for the bank, for the country. And at this moment, one of the biggest priorities for this country is green financing, and so therefore incentivizing banks by giving them priority sector benefits for lending to the green economy will certainly help.
Tarun?
So, SEBI, as you mentioned about SEBI bringing out stringent disclosure norms, but that's for the top 1,000 companies. Now, how do we try and bring along people from various walks of life, corporates, mid-corporates, smaller companies, large projects across? So you need to have a form of incentivization. Rajiv did speak about it. So if I'm a bank, I say that, okay, if you buy an electric vehicle, I'll give you a few basis points off that loan on the interest rate. But how do I incentivize corporates or institutions to get into this space? How do I disincentivize as the regulator? And the third is in terms of learning, or like Rajiv mentioned, educate them, bring people along so that a lot more can come together into one place. The sum of the parts is certainly greater than the whole. Thank you.
Great. Yes, Shrey.
So I think, a harmonized structure for credit guarantees, allowing, as Tarun mentioned, more companies to be supported by the banking community, the development banks, both domestically and internationally, to tap green bond markets would be fantastic. I also think looking at the external commercial borrowing guidelines in relation to green finance itself as use of proceeds, will really create the education and awareness that the market needs. And incentives can come in different forms. Some can be tax incentives. Some can be around withholding tax requirements for investors. But basically, to encourage more issuance from in a green format, and to encourage better disclosure, I think will yield the education and awareness the market requires. I will give a short plug to the City of London's Indian Corporate Bond Market Report, which was launched last year in July 2021, which contains actually 15 recommendations, but you asked to pick just a few.
Okay. We'll keep it for 15 for some time later, maybe. Yes, Nilofer.
Yes, I think I agree with everything that everybody else has said. I think maybe just more incentives. I think on the investor side is and just adding to what Rajiv had said. So, and I think also it was mentioned earlier, maybe for insurance companies, because insurance companies have certain buckets of investments and permitted investments. So maybe expanding that out, and whilst not mandating a minimum amount, but at least allowing up to a certain amount for green investments. For insurance companies, perhaps the same for mutual funds, even for NBFCs, right? Also, maybe thinking about less capital allocation for green investments. I don't know if that's practical or not. Some relaxation perhaps to your single borrower, group borrower limits that are applicable for NBFCs and banks. So, easing the requirements on the investor side, I think is critical, as well as a general awareness. And maybe this is naive of me to say it, but I'm going to say it anyway. I think there just needs to be a much greater civic awareness to the man on the street in terms of how this is actually going to impact us all and the future generations. And I think that there's just not much publicity around that. And I know that we're a developing economy, and I know that we've got some bigger challenges on our hands, but at some point we need to create that awareness over the next 20 years as well.
Thanks for this. And I think we have had such a meaningful discussion that the Green Manifesto can come out of it, really. But just recap whatever points have been made all this while. Increasing limits for priority sector lending for banks, incentivizing schemes for mid corporates, not necessarily only larger companies, harmonizing structure for credit guarantee schemes, and build the taxonomy around it, incentivize the financial structures, and creating more and more awareness for even people on the street. And amazing discussion so far, and this can actually be the manifesto for today. It's time for lightening up a little with some quick rapid fire, and I'm going to put each one of them for pedestal for like 2 quick questions for rapid fire. So are you all set for that?
Sure.
Okay, Rajiv, I'm going to begin with you. The first question: what are you Netflixing these days?
Prime, actually, Bosch season 7.
Okay, if you could have a direct line with the regulator for reforms of sustainable finance, what is one change that you would ask for? Suppose you're a lift with the Patam FM 2-minute elevator pitch with Madam Finance Minister. What would your dispatch to her be?
PSL for green financing. I think that would be huge.
Okay, Shrey, it's time for you. You must have heard so many pitches from companies. It's time to put you on the pedestal. And if you were to make a reverse pitch, especially in the green ESG area, one startup idea, if you were to pitch, which you have not necessarily seen, what would that really be?
I think ESG data aggregation and consistency is something that will be fantastic globally.
Okay. Unicorn in the green space, one company which you admire the most, which you think has the makings of a unicorn.
I think there are fantastic companies in the renewable sector in India which are doing great work. It'll be very, very, very difficult for me to name one, but renewables in India is a very exciting sector.
Okay, Tarun, I come to you. One important trait for the leader of tomorrow, what would that be?
Relevance in the work that we're doing.
Okay, and one piece of advice in improving awareness about ESG and climate change. If you were to do it, how would you do that for a country as diverse and wide as us?
I think we need to go back into history. India being a developing nation, we spoke about the man on the street in the cities, but the man on the street in the rural areas does know his, green initiatives very well. I think we need to connect the dots and put them together, educate each one on each side, and I think marrying those two thought processes will give us a lot of success.
Okay, Arun, I come to you. One innovative solution for emerging markets to finance sustainable infrastructure and promote green growth.
I think actually securitization of green finance, I think institutions like Access, Exim on the ground have better ability to actually underwrite and finance this. And finally, to securitize that and provide that and recycle that capital is I think probably where this market would develop, especially as Rajiv mentioned, for SMEs and MMPs who can't directly approach international investors.
Okay, Nilofa, I come to you the last. One key concern you have when you hear policymakers talk about the sustainable finance narrative.
I think execution and timeline.
As it all well said. Thank you so much, everyone, for your time and energy to this amazing discussion. We had a very meaningful discussion, but it's time for summarization and the word of thanks. And we have a special guest with us for this. Please help me welcome Philip Sittenden, First Secretary, Trade, British Deputy High Commission from Bombay. Yes. Yes, Philip.
Thank you, Shuja, and I don't feel as special as the panelists who've just given us a wonderful range of insights. And it's been a real pleasure to listen to this session on sustainable finance, on raising funding through UK capital markets, which has been organised by the UK government's Department for International Trade in collaboration with our wonderful media partner, Mint. My role is working with companies to facilitate trade investment between the UK and India. And I'm part of the Department for International Trade here that's negotiating the ambitious free trade agreement with India, which we're really excited about at the moment and feeding into. I want to say a special big thank you to our keynote speaker, Alderman Vincent Keaveney, Lord Mayor of the City of London, but also our esteemed panel members who've given us lots of time and some great insights on the growing need for sustainable finance and how UK capital markets are playing a key role. I'll just say a couple more things from the UK and India perspective. We're really committed to working together towards a sustainable, clean and resilient future, and ensuring flows of sustainable finance will really be central to this. Our own UK sovereign green gilt last September, which you may have seen, was actually the largest inaugural green issuance globally, and around valued at £10 billion, and had the largest ever order book for a sovereign green transaction. It's also great to see continued interest from Indian companies to raise money through UK capital markets. I'm not sure we've summarised this yet, but we had 13.8 billion in bonds on the London Stock Exchange, whether that's Masala dollar or green bonds, since 2016. And there's also been further $14.5 billion in equity since 1995. And we're really looking forward to an opening of direct overseas listings as a major opportunity for Indian companies to raise capital directly from international investors, especially in the green space. We do feel there's still untapped potential for India to leverage the City of London's green capital as a world-leading global financial centre and to meet vast financing needs we've heard about here. We hope this session has given you some ideas wherever you're based. And we at the UK government are committed to supporting you in accessing sustainable finance products from the UK, including through capital markets. So we'll be taking away everything we've heard today as well, and working with many of you to take our financial partnership from strength to strength. Once again, thank you for your participation. Look forward to staying in touch.
Thank you, Philip. Thank you for your sort of wonderful concluding remarks, and it's definitely a great reminder of how both India and the UK are trying to determine how to embed sustainable financing in their core DNA. Till the time I see you next, goodbye and good luck. And thank you again to all our speakers for putting their time and energy for this very meaningful panel discussion. Thank you so much. Thank you, everybody. Bye-bye.